Welcome to the Maryland Mortgage Rates Weekly Update for the week of February 18th, 2013. Hello, I'm John Thomas from Primary Residential Mortgage here to give you your update. Well, if we look at what happened last week, mortgage rates did again tick higher as the mortgage bonds sold off. You look at the chart on the screen, you can see the arrow going down. Mortgage bonds have been selling off since the beginning of the year, and the trend is to keep going lower. We were looking to hope to see if we could break out of that trend, but we have not. And the reason why is the stock market has been surging, pulling money out of bonds into stocks. So when the bonds sell off, that forces home loan rates up. So what has been causing this big run up in the stock market? Well, we've been having good economic news and investors are feeling good about the economy. Just last week, we had the consumer sentiment come out better than expected at 76.3 versus 73.5. We saw manufacturing, Empire Manufacturing Report came out better than expected. It increased by 10 points when we thought it was going to be flat. And then we saw the initial jobless claims come out much lower than expected. 27,000 fewer claims were filed than were anticipated. The number came in at 341,000 claims. That is almost at a 5-year low. So all this good news on the economy is helping investors feel excited. So they're moving money out of the bond market into the stock market, and that is causing home loan rates to move up. So if you are closing in the next 30 days, we're going to recommend locking your Maryland mortgage rate. If you're closing out of 60 days and out, like new construction, we're going to recommend floating. And the reason why is this big stock market rally, this big run up, there's going to be a pullback. And when that pullback happens, it'll be a big pullback. And at that point, the money will shift back to bonds, and you'll see home loan rates improve. Now, when that's going to happen? Probably in the next month to 2 to 3 months. At some point, there's going to be this pullback. We don't know when. That's why we're recommending locking short term, because the risk is the trend is for rates to keep going up. But we got to break that trend with a stock market sell-off. Last week, we also saw the National Association of Realtors reported that the national median existing single-family home price surged 10% since last year. It went up to $178,900. This year-over-year increase of 10% is the largest increase since 2005. Last week we talked about FHA. FHA announced they're increasing the monthly mortgage insurance premium April 1st. And then they're going to make it for the life of the loan on June 3rd. This increase is because HUD is saying their reserves are below what Congress requires them to have, so they need to increase revenue to bolster those funds. Now, there's a great video which I linked to in the blog which explains this may not be true. It may be the HUD actually has the money in their general fund, which is a separate fund, and all they have to do is move it over to the MIP fund. And the money in the general fund came from the MIP fund. So since they're not using it, move it back, solves the problem. We don't have to raise MIP or make it for the life of the loan. So check out the video. Very, very good video. Very eye-opening. In the local news, the next free Maryland First-Time Homebuyer Seminar is on Saturday, March 23rd, and that's from 10 a.m. to noon at the Sheraton Baltimore North Hotel right in Towson on Delaney Road. If you'd like to register for that event, give us a call in the office, 410-412-3319, or register online, MarylandHomebuyerSeminars.com. If you would like to get a free pre-approval for a Maryland home loan or are interested in getting a refinance done, give us a call in the office, 410-412-3319, or you can apply online, www.primaryresidentialmortgage.info. Look forward to seeing you guys next week.